Right, welcome everybody. Let us get going. So this week we have non-farm payroll. So what I'm going to talk to you about is the relationships in the market and what to watch out for as we head into what is normally one of the most volatile periods of the year. So whatever comes out of the next couple of weeks is going to have a big impact on where we could end up year end. Right, so what I want to do is let's look at the bond market. So on the left, you've got monthly bond, 20-year notes, US notes, and on the right, you've got the monthly Dow. So we're right. So if you look at last month, if I just peel that back, we got what I would call a bit of a spinning top. That's where you're high, but you don't really go anywhere. You're flat. You're literally spinning a plate. So normally I would expect at the very least a pullback on the back of that. It is higher, but it's marginal. So that in August, we opened the market at roughly 41,000 and we finished at 41,600. So for the whole of August, we did 600 pips, but we dropped to 38,350. So a big push from the upside after that move, early month move, but overall we were very weak. Well, very weak in that we couldn't really make a significant push higher. In the meantime, the bond market, these 20-year notes, went pretty much sideways. And let's have a look. July, August. Yeah, they were pretty flat as well. They had a high of just over 10,000 and then pulled back. So why have I pulled up these monthly charts and what am I looking for here? Um, what I'm concerned about is if you need a healthy bond market for healthy stock market. If too much money flows into the bonds, then that's a sign a lot of money is coming out of the stock market or out of stocks. But if you have um, a collapse in bonds, then you've potentially got a big issue with the way in which the mechanics of the market. Why? Because the US has got 36 trillion, I can't remember the exact figure now, but it's round about $36 trillion of debt, sovereign debt, which they cannot repay. I believe it's something like 105% of GDP. I've lost a note of the GDP ratio, but it's a lot. And every 100 days, the US adds another $1 trillion to this. Is mainly down to COVID. Yeah, when everybody when the country locked down, everybody either went home or went to work from home. It created that situation where funding for that lockdown meant increasing debt. So to cut a long story short, this market is potentially in transition because the cost of servicing this debt is so high with these high interest rates. If the Fed doesn't start to reduce rates pretty quickly, then the fiscal situation in the US is going to get pretty dire. Okay, so let's just stick to the Dow for the moment. If I'm right about this spinning top, then and look at the divergence. Let's stick to the technicals for the moment and stick to the Dow. What we've got here is declining volume. So when we pushed up here, we came up on higher volume. In the recently, we have been seeing lower highs in the volume. So we're coming up here potentially on lower volume. And the MACD down here is divergent. So we've made a new high here. Let's get the pen. We've made a new high here and a lower high in the averages on the MACD. Because last time we peaked up here, last time we had a high that then subsequently flipped, we were up there. And the histogram is making a lower high as well. So there are a lot of divergence. So we've got potentially, we come up on lower volume. We've got averages which are wide open but divergent. And then we've got the spinning top. So the potential for a lot more volatility this month is great. And we've also got triple witching. So on the 20th of September, all the contracts and all the options expire and roll over. So we could even see, if we look at, this is the daily chart now. And even the daily chart is, as you'd expect, is showing divergence. So we've got this histogram making lower highs. We had higher volume up here than we have had here. Obviously, the US is off today. It's Labor Day. So this 41,400, the July highs could be the main marker. If we can hold this, we've got the potential to at least come into the trend line up here at 42,000. So watch out for 41,390. We've got all the support under here as well. So we could come into this, could come as low as 41,000. So if we dip and subsequently pull back above that 41,400, that's very bullish, and then we could come and see the 42,000. If we have a big close down here and close right underneath and a big red bar here, closing right underneath 41,400, then 41,400 is going to be the place to short. So these markets are at a very important place in their life in this year. And it's as we head into monthly jobs, that is something to watch very, very carefully. FTSE, um, FTSE is very similar, very, very similar. The only main difference with the FTSE, now that's interesting. Look at the MACD on the FTSE. It's not divergent. But the histogram is struggling. So the histogram is suggesting that momentum is coming out of the market. And that monthly chart is much more of a spinning top than the US is. So these are warning signals. Let's have a look at the daily. Right. So last week I suggested that the FTSE could come and find 8,500 last week. Well, that didn't happen. Got to 84.24, and here we are at current level is 83.75. So we're struggling. Now this daily chart is very divergent at the moment. The histogram up here on the 10th of May this year was very bullish, very high, but very extended. And here we are struggling up here. The other thing is with the US market is we are very expensive. The average PE ratios, potential earnings ratios, is very high. We're looking at 27, 28 as an average on the S&P, which puts this market at a very expensive place. And if you look at bellwethers like Nvidia, here's Nvidia on the earnings was last Wednesday. We dropped, so we've been making a series of lower highs and lower lows in Nvidia, and it's not holding up. So lower highs and lower lows. So with earnings, whichever way we come out of the earnings high and low is the potential direction for the future of any stock. So if Nvidia can hold here and build above 125 and ultimately 130, we can go up here to 160. So this is potentially, and look at the volume here. So this dip in Nvidia appears to be getting bought. So I would steer clear of it and wait at least until we can close and hold well above 120. So I'd be patient if you're interested in Nvidia. Very interesting stock. It's been on quite some run. Look at the monthly chart on this. It's huge. This is, I think it's something like 6.5% of the S&P. So we have had two lower closes on a monthly chart. And you can see how expensive this one is. So I think Nvidia is due a decent pullback and a place to start to look for Nvidia. Wow, I mean, if the market really takes a fright, it could easily come back to 77, 75, or even the 60 mark. I would, if we, it will be very nice to see Nvidia down at that 60 mark. If we see it, you can see this recent low is right on a fib support ratio down there at 91.50. Okay, so let's just have a look at gold on the monthly chart. Very bullish MACD, volumes holding up, but we are struggling. There's a decent monthly bar, but I think if we see 24.50 and we hold, I think that is viable. Otherwise, if it's that bullish, let's have a look at the daily. I think 24.80. Yeah, 24.85 is this high from July. So I think if this week, if we see 24.80 holding, 24.85, 24.80 holding, I think that's viable to see if we can come and test 25.37 and ultimately 2600. The market thinks there's a very high probability that the Fed are going to start to really drag interest rates down. Okay, but if we close under 28, sorry, 24.80, be very careful. So look at things like wheat. So this is typical of commodities. Um, they often do this. Here on the 26th of August, we break down on this support and then we immediately close higher. So I think wheat that's a really bullish buy signal to me. And any retest of 525, 530 is viable. I think it probably will do it. I think it, so if you're patient, if you're in it, stay put. I did call this buy signal here on the 28th. If let's look at the monthly. Yeah, so wheat was closed today. So we've closed higher off of this trend line support on the wheat. So I think that's really bullish. If this runs, $7.50 is a resistance area, and it's got the potential to go 8.5. And I over a period of 6 to 18 months, I would expect that to go and find 10. Look at the MACD at the bottom there. Very divergent on this last dip. So if the MACD can cross here in the coming weeks and months, I think that is a very good omen for wheat. Sugar. The sugar's had an even better month. That's a significant, it didn't engulf July's high, but it did close higher, well into that area. So I think if you see 11 again on the wheat, on the sugar, I think that can pick up as well. I'm very bullish commodities. I think with a potential dollar weakness and climate change as the weeks and months tick by and we're getting to end of this year into next, I think that could really pick up. So I like commodities a lot. And if you trade in an ETF, you don't need to have leverage. Oil, oil is, I think if this market does hit the skids, I think this oil is going to break down. It's right on the line there. 2 months lower. There's a monthly chart still on oil. Um, that's a lot of support. But if we break 70, this low, last month's low, down there about 71 and a half, I can see that really dropping out the sky. Because what are we getting? We're getting a series of lower highs. Ever since we had a lower high there, we're getting a series of lower highs. So this is the latest series of lower highs. So to break this low, I think this could come tumbling down to I would think at least 60. 50 is an obvious number because the oil, well, all commodities like round numbers. Let's see where 50 comes on this ratio. Yeah, so 54 will bring us into that level of support. 36 would take us down to November 20. But the most likely scenario for me, thinking about it, I think 50 is a could be a realistic target for oil if we break last month's low. On the bull side, if we here we are at 74 nearly or 73.60 as we speak. If that holds 75 in the coming into next week, then expect that to go and retest 80, 82. But I think that could fall out. Look how we fell out here in August 14. Series of lower highs from, well, the move up in July '08, lower high April 2011, lower high August 13, lower high June 14, and we fall out. And that was this period of the year. That was in the September. Yeah, so we broke the low in that September 14 and fell to 28. So be careful. Right, let's quickly look through some stocks. Tullow, let's stick to the monthly charts at the moment. Um, it's really struggling. If I'm right about oil, um, this could tumble lower. So be careful with Tullow. Capita is doing all right. Let's look at the weekly. Yeah. So we're sitting in this nice big move from July. So Capita could pick up. We can break that 2022 again. I think that could pick up. Prudential. Prudential's right on the line. Look, we're right down, sitting on that March 2020 support. So if we hold this 650 this week, I could see Prudential picking up. If we drop under 640, 630, then we're lower. We had good volume in August, in early August, and then we saw a significant drop at the back end of the month. Um, I think that can pick up. I actually think Prudential's a buy here at 640, 650. We finished at 651 today. And we'll look at a few more bellwether stocks. So my tip for this week is Prudential, but just be very careful. Rolls-Royce, wow, that's been on quite some run. That is, so we've had 3 weeks of lower closes. Sorry, 2 weeks of lower closes. Look at that. 2 weeks we couldn't get through that £5, and we are looking as if we're going to start to pull back now. Vodafone. Vodafone is having a good time. If we hold up on this trend line and stay above 74, 75, I think we can at least expect to see 80. If that really kicks off, really gets going, then we could go and find the pound mark. BT sitting up. Just appears to be just a question of holding on to that. If you're interested in buying, wow, you never know. You might see 130, 132 on a bad day. Either. I like these stocks like Pfizer. I think that is holding up well. I think that's viable. So 28, and see if that could really. Wow, wasn't that long ago? It was at 56. Any pullback to 27, currently 29. I think 25 to 27 is buyable. Let's put the 20-day average, or let's put the 50 on that. Yeah, look at that. We're sitting above the 50-day average. I think that's very encouraging. So I like Pfizer and Prudential. Bar Barclays, that's done well. That's had a good summer. Um, if that can hold on to £2 to 220, I can see that. Or 227. See if that dips to £2. ASOS. Horrible, isn't it? Horrible. Right. Thanks for joining me. I hope you found that useful, and I will do regular updates as the week unfolds. And then I'll talk about how I'm going to develop this service for you. Thanks for joining me, and